Hi traders, hope you're doing well. Welcome to my video on the Slingshot Indicator trading strategy. So this is a very simple strategy I'm going to show you, which you can use to capture moves such as this one for over 600 pips and counting. Okay, so I've got the Slingshot Indicator here on my chart. This is a Euro Dollar 1 hour chart in the MT4 MetaTrader 4 trading platform. You can use this strategy on any trading platform, any trading instruments, so Forex, stocks, cryptos, commodities, indices, etc., and also any chart time frame. Okay, personally, I prefer higher chart time frames such as the 1 hour, 4 hour, daily, weekly, monthly, simply because they contain more price data, and therefore I find signals tend to be more reliable. That applies not just to technical indicators, but also price action analysis, support, resistance, trend lines, etc. Okay, so the basis of this trading strategy is we're going to trade in line with the trend. We're going to aim to capture as many pips as possible. So we're not going to use a fixed take profit level. For me, that just leaves too much pips on the table. So what we're looking for is we're looking for the Slingshot indicator to be red for a downtrend or green for an uptrend. As you can see, it's red here. So once the indicator turns the desired color, we're going to wait for an entry opportunity. So how this indicator displays entry opportunities is, you can see it's red, and then when there's a pullback, you get these red dots, okay? And that's when you would enter in the trend, downwards trend, pull back here, and then you can sell there or sell here, and you're into this trend at reasonable prices, okay? So there, you're good for around 500 pips, if not more, okay? Here, 500 pips, if not more. You want to be cautious when you see, it doesn't mean you need to always take the signals when you see them. For example, here, just be cautious. If you've already had the move like this, you might be selling near the low, okay? So in this instance, you just might want to wait for a reversal before thinking about taking a position, okay? In terms of money management, let's just say you took this trade here, stop loss, just probably around this area here. We're looking at that line of support, so here somewhere, okay? What we're looking at around 10 to 15 pips. What I wouldn't do is I wouldn't exit straight away as soon as price drops. I'm not gonna, okay, that's 100 pips, which seems great, fantastic, 100 pips profit. However, you're just leaving a lot on the table. There's a lot more you can make out of this trade. So in that instance, I would just move the stop loss to break even once we're in a nice bit of profit, and then just use a trailing stop above recent highs to maximize the move as much as possible. You can, of course, manually exit once you see price to start making higher lows and turn around. Okay. As I said, you don't need to take the signals every time they appear. Like in this scenario, if you're just buying and selling every time you see these red or green dots, you're going to just get chopped in and out of the market. Instead, I'm going to want to wait for a clear trend to form, okay, and then time the entry on these pullback areas here without selling too low or buying too high. Have good money management, okay, so I like to cut losing trades short, let winning trades run. That way, even if we have a few losing trades for 10 to 20 pips, let's say, it doesn't matter because we know when we capture a big trend for hundreds of pips, we're going to make back those losses and more. Okay, so that's example in a downtrend. If we just have a look at an uptrend, okay, you got a clear uptrend. If you're struggling to determine how there's an uptrend or downtrend, just do this. Just draw support and draw a trend line. Okay, higher lows, market's going upwards, so coming away from support. These are green. The slingshot indicator is green. Okay, when you get the green dots, that's your pullback. You can trade if you like on the pullbacks, or wait for a bigger breakout, continuation of the trend. Again, you get your pullbacks and you can enter there. Okay, and here as well. But again, be cautious. After a big move like this, you don't want to buy too high. Okay, especially as you see the market start to make these lower highs. For stop loss, again, let's just say you saw these lower highs, these higher lows here. You took this entry on this pullback. Stop loss I'd probably place just below this low area here. So around, that looks about 10 to 15 pips, I'd say. And again, we're not going to exit too soon. We don't want to exit here. It looks good, okay, 40 pips, happy days, but no, not really. Because when you come back a few days later and you see that price has gone almost 300 pips, there was plenty more on offer. Okay, so that's the basics of the Slingshot system. It's trend trading. We're only trading in the direction of a trend. You know, when you see these sell trades here, we don't take those signals just because we know the overall market is going up, which is why I don't just rely solely on this indicator for the trend direction. I'm going to want to look at the market myself and draw my own lines. Okay, and then I'll determine if I'm going to trade long or short. So I'd ignore all short signals up here till the market turns around. Just as when we're in a big downtrend like this, I'm not going to take any buy signals. Okay, now where does this indicator fall short? Well, for me, the majority of technical indicators are lagging or repainting. And I would not take a trade because this indicator tells me it doesn't have a signal. For instance, I can see here that we've had this level of resistance, okay? Triple top formation, it's been tested 3 times, it's held up well. Okay. I can also see that this trend line of support has been breached. Okay, breakout there. So we've got the breakout of this support line. Okay, we've got the lower highs and the resistance. And then we get this pullback, and arguably an aggressive trade would have been this one here. Okay, that would have been an aggressive breakout trade, you know, lower highs, breakout there. This is a potential entry, and you can see it's a lot earlier into this trend, a lot more pips on the table. Again, stop loss just above the high here, so only 10 to 15 pips and over 600 pips profit potential using a trailing stop on the way down, closing part of the position if you deem necessary. Perhaps when you see price fall from here, I don't know, to like, and then have a pullback here, you might want to look to close part of the position around here, okay, and maybe put your trailing stop at the high and let the rest run, for example. Okay, and if you missed that, or you just wanted to take a more conservative approach, wait for the trend to continue down as it does there, then get in on the next pullback. You have the opportunity. Nice M pattern formation there. Okay, lots of bearish price action. Support then becomes resistance. You could have entered here. Failing that, you even have another opportunity here, another M chart pattern formation and a big breakout to the downside. This is an NFP non-farms payroll first Friday of the month candle, but we could have used the momentum from that to hop in on this move. I do have a video with NFP strategies you might want to check out. But nonetheless, the point I'm trying to emphasize with this is if you rely too much on indicators or, you know, the dots must be there, I won't take a trade if they're not, you can miss signals because there's no dots here, but these are good, in my opinion, entries there, and there into this trend. Okay, this is arguably, you know, we could have been in 150 pips before this entry here. Not to mention on a pullback can also be a reversal. So in this instance, when I do see this, I may not sell anyway because I don't know if the price is going to continue going up. So what you can do to mitigate that is you can, when you see these dots, just draw your level of support in a downtrend and wait to see if the support is breached. Support is breached there, becomes resistance continuation. So that could have been a trade there. You don't have to again sell as soon as you see the dot. If you do that, price does go against you. You can just do what we just done there. Draw your support. You got an M pattern formation there, breakout, continuation. Same here. Okay, you see these dots, you don't necessarily need to sell right away. You can just draw your support line, wait for a breakout and trade there. But again, being cautious, you don't want to sell necessarily at the low after a big move like so. Okay, if we look at the uptrend example, I can see here, see as the trend was going up, we had some nice dots here, okay, but also we had a pullback here and a big breakout. That could have been a trade, no dots. Pullback breakout, that could have been a trade, no dots. Pullback breakout, that could have been a trade. And there are dots here to be fair, but you could have confirmed with a breakout there of resistance. But I can see here how, you know, it would have been a good timed entry there into the overall trend. So it's good, but then it doesn't really take into account support and resistance, which for me is the biggest thing. Like when price falls down here, we know that we're in an overall uptrend. Okay, and the indicator is green to agree that, but we've just had this bit of resistance. Okay, and the price is making lower highs as well. So, you know, we may have wanted to sit on our hands and wait until perhaps this area of consolidation. Okay, we have a breakout then of this resistance here, which could have been an opportunity as well. So I think the slingshot system is pretty solid, to be honest, but you will need good money management. Okay, I can see another market's making these higher lows. If you didn't take the slingshot entry there, or you've seen the dots, you could have just waited for a pullback. Okay, you've got almost a 3-bar pattern in there as well. You traded on the breakout there, or if you wanted to be more conservative, you could have just waited for a breakout of this resistance. Okay, either way, the key here, if you take one thing away from this video, is good money management, good trading discipline. So don't let fear, anger, and greed cloud your trading decisions. Don't force trades aren't there. Don't revenge trade. Don't overtrade. And have good money management. I like to cut losing trades short, let winning trades run. We can trade smart, not hard. Once we capture big trends like this, we want to make the most of them. You know, we don't want to just enter here, exit for 20 pips, enter again, exit for 20 pips. We just want the one good trade, okay, and then get as many pips as possible. Because if we have, say, an average 20 pip stop loss and we take 5 losses, we're down 100 pips, but we don't cry about it because we know when we do eventually land the big trend, we can make 300, 400, 500 pips and make back those losses and then some more. It takes practice. Make sure you practice on demo. And as good as the slingshot system is, I mean, if we just remove it, you can just use trend lines and support and resistance. Have a knowledge of candlestick patterns and you can create, you know, a solid strategy that way. You know, market goes down, so we're going to sell. We're just going to time our entry. Just trade in the direction of the market and time your entry. Market's going down. Okay, let's wait for a pullback. Pullback, breakout trade. Okay, pullback, breakout trade. Okay, you can find these opportunities, just takes practice as well. You can see this support line there was breached, and we come into this downtrend, lower highs, pullback. Okay, support, pullback, breakout, support becomes resistance, continuation. Good money management, time in your entry. And yeah, you can capture some good trades. Thank you for watching. If you found something useful, please like and subscribe. And I hope to catch you on the next one. Take care.